This is a Brooklyn-bound 2 train. The next stop is Wall Street.
Stand clear of the closing doors, please.
Welcome back. Happy Friday, or not so happy Friday, depending on which way you were leaning. This is Not Your Advisor with NYU Grad on April 4th. Let's jump right into today's very nasty session. Worse than yesterday, if you can believe it. We have to bounce eventually, but today was not the day. Let's go to breath. I mean, this is almost comical. We had 115 new highs versus 3,438 new lows. So we had a discourse on the private chat. This is not small-time traders that moves the market like this. This is institutional big money crowd that is selling. You and I cannot move Apple 7%. Ever. At least I don't know any friends of mine that can move Apple 7%. I don't know Warren Buffett. But wow. We had 11% advancing versus 86% declining. 87% below the 50-day. 83% below the 200-day. I mean, we're getting to levels where we have to bounce. We have to bounce. Like, we can't have 100% of stocks underneath the 200-day, right? Like, it's just very rare. We have to bounce soon. But I just want to warn you all, when the sentiment is consensus, we have to bounce, we necessarily don't have to bounce right away. Man, this has been a crazy week. Even for me, look, I graduated NYU in 99. I cut class with my classmates to day trade, Ask Jeeves and E-Trade and all those companies, and Compaq, Gateway Computers. I traded through the GFC. I'm just godsmacked. This week was for the record books. And I think it's going to go down in textbooks in the future. Whether it be political leanings, political causations, or, this sell-off was due, whatever it may be, this is going to be in the history books. Taking a quick look at mega cap land, almost everything is red. But I'll cover the Mag 7. Microsoft down 3.6, Nvidia down 7.3, Apple down 7.3, Amazon 4.1. These are all percentages. Tesla down 10.4%, Google down 3.2%, Meta down 5%. Every sector is red for the day and for the week. When you look at the 3-month performance, every sector is red except for consumer defensive. Holy macro. I'm going to try to get through this as quick as I can. For the 1-day performance, leading to the downside is energy, down 8.6%, basic materials 7.1%, financial 7%, technology 6.3%, industrials 5.7%, healthcare down 5.6%, utilities down 5.6%, communication service down 5.1%, consumer cyclical 4.8%, real estate 4.4%, consumer defensive 4.4%. For the 1-week performance, leading to the downside, energy down 13%, technology for the week down 11.4%, financials down 10.3%, basic materials for the week down 9.6%, industrials 8.8%, consumer cyclical 8.5%, communication services 8.1%, healthcare 7.2%, real estate 6.4%, utilities 4.5%, consumer defensive 2.08%. So we're in April, so let's go do the 3-month performance. You ready? For 3 months ended, technology is down 22%. Consumer cyclical down 17%. Communication services down 13%. Industrials 11.5. Energy 8.5. Financial 7.8. Basic materials 5.2. Healthcare 4.6. Real estate 4.4. Utilities 2.7. Consumer defensive is up 0.43%. If your financial advisor has not called you or called you today for the first time, you repeat these numbers and ask, where the F were you? This is a bloodbath. Let's keep peeling this onion. I am going to dedicate this to Steph Curry. Night, night. Reciprocate, the reciprocal, reciprocation. Now, I get the most anxiety and the most paranoia when all my shots are going in. I'm just in the zone. Every trade I put on is a winner. I am so paranoid. I'm micromanaging my short positions. We have to bounce. We have to bounce. All right? Like 80+% of stocks are below their 200 day. The prevailing rumor / chatter is over the weekend, China will bend the knee. Trump will claim a victory, and there's some negotiations and talks, etc. And the EU won't do anything. That's the prevailing chatter right now. But looking at this week's body of evidence, forget the news, just the body of evidence, the price action, the volume, the sheer breadth, it tells me this is a game changer. This is a new paradigm shift. Until something breaks the fever, if you've had a fever, a bad one, or if your child or your baby has had a bad fever and you're upset, or you're like, I don't know what to do, and you're just waiting for the fever to break. Something has to break this fever, whether it is a weekend press release saying, oh, the tariffs are done, we've negotiated. Something has to be a catalyst to end this. Otherwise, Monday could be pretty bad. For the markets to be like this after yesterday, to be worse than yesterday, I haven't seen this in a long, long time. I'm really speechless, folks. This is really bad. Curiously, the list that I report on for profitable companies in the NASDAQ that made new highs, there actually were 5. Take a look at those premium subscribers. All right, I'm gonna just go with this format. What was strong in the S&P? Decker's Outdoor 4.9%, NVR up 4.3%, DR Horton New Home Builder up 4%. I don't know why. Nike up 2.7%. I don't know why. Pulte up 3.2%. I don't know why. The NASDAQ MSTR up 4%. Lululemon up 3%. Again, I have no idea why. What was down in the S&P, I am only going to cover to the 10% to the downside. The links are in the show notes for paying subscribers. GE Healthcare down 15.9%. Apicorp 14.3%. Freeport-McMoRan 13.2%. Baker Hughes 13.3%. Micron 12.9%. ONEC 12.9, DuPont 12.9, Apollo 12.5, Diamondback Energy 12.5, Texas Pacific 11.9, Discovery 11.9, Albemarle 11.9. I'm going to leave the rest to the show notes. This is a long list. NASDAQ 100, I'm going to only cover a few here. AppLovin 16.2%, GE Healthcare 16%, Baker Hughes 13.3%, Micron 12.9%, Diamondback Energy 12.5%, Discovery 11.9%. A lot of duplicates here. Palantir 11.4%, Intel 11.2%, Tesla I already covered. It was a bloodbath. Let's transition over to the macro here.
We can't forget that this is just a small taste of the in-depth analysis that Not Your Advisor provides. They don't just throw numbers at you. They connect the dots, find those hidden trends, and help you understand what's driving the markets.
If you want the full picture, you got to check out the full Not Your Advisor episode.
Don't forget to subscribe to notyouradvisor.com.
And all their premium content. I mean, it's like having a direct line to what's really going on in the market.
It is. It really is. They cut through all the BS and give you the kind of info that you just won't find anywhere else.
Think about this. Investing is all about making decisions that work for you and your goals. You're the one in control.
Not Your Advisor can give you the map, but you choose where you want to go.
And with that empowering thought, we'll sign off. Happy investing.
Stand clear of the closing doors, please.